There's been a significant transformation of the business. Clearly towards the end of 2015, 2016, it was a difficult period. We had to make tough decisions. We had to restructure the business, but we've been on an improvement trajectory, and we're very pleased that in the last year or so, we've seen significant gains right across the business, from safety, productivity, to financial performance of the business as well.
But there was pain. There was a chopping of more than 30% of the workforce. Well, what would you say to South Africans who say, how could you? How could you do that, given unemployment in our country?
Yeah, I mean, it was unfortunate, but at the end of the day, you have to make those calls sometimes to save the business. And we did that. And we're very happy to say as well that having done that, the significant transformation that we've made to the business has actually opened up other opportunities going forward. So the business is in a much stronger position. We've positioned the business to be able to invest more into the future. So whilst, yes, there was the pain in the past, and it was a very, very difficult period for us, when we look forward to great prospects.
And some of the jobs are even coming back.
Yeah, I mean, there's projects that we're engaged in. We're able to hire people. We're also looking at our services and goods procurement, and that as well is obviously allowing for opportunities for jobs.
Okay, so iron ore, what you sell goes into steel. Some of it's sold in South Africa, most abroad. Any impact when US President Donald Trump says we're going to raise tariffs on steel coming into America?
The seaborne market is largely a China story. So the US contributes to about 3%. So the impact is quite minimal. Also, when you look at the talk around the tariffs, it tends to be still products that are not of the high quality where we play in, because our products are second to none. They tend to go into the higher quality steel products. So by and large, the American steel component of the seaborne market is fairly small. And
China is becoming much cleaner. You would think that would be bad for steel production, but it's actually not, concerning the ore that you sell.
It is. It's actually very good for us, because when it becomes cleaner, there's a drive for more productivity, which means that there's a drive for the higher quality iron ores, and of course that's the space that we play in. So we see demand for our products. We see higher premiums that the customers are willing to pay for, and ultimately it's far better for the environment, which has to be a good thing for all of us.
It does, but what if there's a China shock, the trade war between the US and China on hold for now, but what if that escalates? What if Chinese growth is affected? Are you too reliant on China?
No, not really. Clearly, China makes up about well over 60% of our customer base. But having said that, in the rest of Asia, Japan, Korea, those are significant markets for us. India is a market for us as well. And then when you look at the Middle East, Europe and America, those are also markets for us, and also Africa as well.
And a major shareholder of Anglo has been talking about India, the potential there.
In terms of India growth, the Indian growth story, look, I mean, I think everybody is obviously looking forward to developments in other parts of the world, whether it's India, the next, or whether it's Africa. Yes, I mean, I think that's good for the global economy.
Now,